Good morning, everyone, and happy CPI Day. I'm your host, Ryan Rozbiani. Welcome to Markets Simplified on the Place Your Trades Network. We're the network that focuses on trading daily options using CME Group's event contracts to trade the indices, metals, energy, and even Bitcoin market futures. Today's broadcast is brought to you by Tradeovate, which has built the custom app dedicated to trading event contracts, which is what we use here at Place Your Trades. Folks, welcome. What an exciting day. We've got so much to talk about. I'm really excited to talk to you about because this is the first time where CPI ended up on a Thursday since we've started the show. So we get to talk about it in real time, what happened today. It's a CPI fallout the day of, not the next day usually, because CPI is either on a Tuesday, Wednesday. Then when we meet on Thursday, I catch you guys up. But today was right away. We had it. So let's get started with the market overview part of the show. Then we'll do some price action of what's happening in the markets, and then we'll discuss our event-based contracts. So I've created some stuff for you guys here so we can kind of break it down. But essentially, in a nutshell, we can see here that CPI data came out. We did come in hotter year over year, right? Last time we were at 3.0 for year over year. This time we came in at 3.2. The estimate was 3.3, better than estimated. And we'll go through the line items one by one. But still, we came in hotter. And this was because of the mathematics. If you guys saw my video on Twitter, I broke it down. The mathematics was just not on our side for year-over-year calculations. The value for CPI last July was much lower than where we are now, which kind of forced mathematically for it to be over 3, even if we had negative year-over-year growth. So we were kind of forced to go up. So it was not a fantastic thing, but it was really the mathematics were there, and we'll discuss the line items. Month over month, we came in at 0.2. I believe that was flat. Month over month was 0.2. Yeah, that was flat month over month. Core came in lower. Happy to see that. An estimate of 4.8 came down to 4.7. Last time core CPI was at 4.8. So that's good. We were supposed to come in flat. She came in lower. Very happy with that. That's the most important part of CPI for me. And core month over month came in flat at 0.2. So across the board, the headlines for these bottom three, everyone was happy. So far, so good. Steady she goes. The year-over-year headline number wasn't beautiful because the math was really against us. And it wasn't just the math. Look, we've been focusing on core items here. So let me just put this right here. Boom. So I posted this on the Twitter. You probably saw it on the newsletter you got this morning as well. If you haven't, go to placeyourtrades.com. Sign up for that newsletter. If you don't want to type that whole thing out, the link is in the description for the video. Go in there, put in your email. You get a newsletter every single morning. It's fantastic, chock full of information and data, plus gives you a showcase of what's coming on the shows throughout the day. I highly recommend you do that. It's one of my early morning reads. Realistic, I'm not just saying that because I'm on the network. Seriously, I read it every morning. So let's take a breakdown look of what happens with the items for CPI. So CPI, if you're familiar, if you're not familiar, let me give you a quick breakdown. It's broken down into parts called core CPI, and non-core. Core CPI items are all the items that are not food and energy, which are the top line items here. And non-core CPI, I call it non-core CPI, whatever, is food and energy, right? So this is the part of the equation where things get interesting. So month over month, let's just go through it, and then I'll tell you why I think it's interesting. Month over month, so green means we came down or we were flat. Red means that, hey, we went higher. So food at home, so food in general went up. Not happy about that. I'm not happy about that. Food at home went up significantly. And then food away from home actually came down, which to me is weirdly funny. I'm not sure how food away from home came down, but food at home doesn't. That's one thing that always boggles me because the restaurants use the ingredients unless they're paying people less. That's a whole different equation, and we can dive into that later if we have time in the show. But energy across the board, you can see here energy itself went down. Energy commodities went down. Gasoline went down. I actually have a little typo here. Gasoline, all types went down, but fuel oil went up significantly. So ignore this little typo right here. So fuel oil is the one that went up significantly from negative 0.4 to 3.0. So that is what kind of happened there. Not too crazy about that style situation there, about that happening, but that's okay. That happens. It's not a big deal. But it is a big deal, right? I'm lying if I say it's not a big deal. It's a big deal because we're paying for it at the pump, so I'm not crazy about that. Energy services came down. Electricity came down. Now, electricity, I'm expecting this to go up next time because every single headline that I'm reading about is electricity prices going up. Utility gas, which is our nat gas, went up. Nat gas is going to be playing games with us. Thankfully, nat gas only is 0.6 of the whole energy sector breakdown, so it's not too big of a deal. But the non-core item, the core items, I keep saying non-core, the core items are what I'm very happy about. This is what's called sticky inflation. This is the part that everyone's been freaking out about. The services inflation, they call it. Sticky inflation. Core inflation is what it's called. This puppy came down almost everything across the board except medical care commodities. And this is medical care commodities. I spoke to someone who's actually in the medical care center this morning. And he said it's really due to some negotiations for labor costs is what's kind of causing those prices to shift there. So that's interesting to see. And shelter coming in flat. Now, shelter is lagging. We'll probably see this kind of become kind of like a tailwind later down the pike. Right? It's been a headwind all year. It's kind of like a flat wind. I know that's not a real word. It's kind of flattened out, but maybe it becomes a tailwind and kind of starts dipping down lower. But looking at rental prices now, looking at the average price of a home now, we're still not at that point, honestly, that I'm comfortable with saying that, hey, it's come down enough where it's going to kind of help this core inflation kind of cool down, chill out, and be where it needs to be, So that's kind of one thing that I'm not 100% confident on there yet, but we'll get there. I think we'll get there eventually, but just not there yet. The shelter and housing services of the world are still funky. Now, this is where things get weird, right? This is where things get weird, is you're seeing, again, that non-core inflation playing an annoying part in the year-over-year calculations. Energy higher across the pike, essentially here, except electricity. And, except electricity, essentially. Nat gas higher. But it's going to take some ups and downs because of seasonality issues. You're dealing with seasonality issues. Keep that in mind there. And then apparel is the one in the core items that caused some heartburn out of all the things that we deal with. Apparel. It's funny, but it is what it is. And then transportation services. So this is kind of like a breakdown of the line items that we have here for CPI. And the market's reacted in a very, very funny way. So I know we're going to do some price action. I know we don't directly go to the S&P right away, but I'm going to do it right now because it's been very, very, very funny price action that I've been seeing. I'm going to turn everything off. We're on an hourly chart and you can see right away I'm kind of spoiling it for you, but let me go to something like a 5-minute chart, and you can see it right at the open. Markets gapped up, had a very, very good time, went all the way up to 451.70, and you'll see why we were rejected here. It's a technical rejection, and then kind of have come down and have kind of been flushing. It's been ugly. It's trying its best to kind of hold that 481, which is interesting to see that it's trying to do that. It's having this kind of pain point of trying to do that. But now I personally trade the 3-minute. So let me just show you the 3-minute because that's the time frame that I've been trading this morning. It hits and then it rejects. It's been hitting and rejecting. And really what I've seen is this 20 MA, if you can get over it, I call it fireworks in our group chat. And then if you're below it, it's kind of like a term. You're kind of like rolling down the hill a little bit until you can kind of find support. Your saving grace right now is to see if this 200 MA can catch her. Can this 200 MA catch her and kind of give us that bounce? We'll have to see that there, and we'll do more discussion when we go into that. But I have a few more economic items that I want to go through. So we're not exactly done with the market overview part of the show. I want to talk to you guys about what happens tomorrow. Tomorrow we have PPI data, the producer price index data coming out. And then overnight you have some China data coming out as well. That might affect stuff. I don't know. We'll see that later tonight. But really, we can see here that for excuse me. For PPI, core is estimated to come in a little bit higher for month over month and then slightly lower for year over year. The reason PPI is important is it's the producer price index. It kind of sometimes gives you an idea of where the future CPI could be. This hasn't been exactly one-to-one. That's kind of something that a lot of people say that it's a future of where things could be. It hasn't been like that this year, and for the past few prints rather. Exactly, right? Because the last print for PPI, I can show you here, for example, PPI last print year over year, which is estimated to come in higher, which means the next CPI will be higher. If we take a look at the print from last time, it came down significantly lower. That means today's CPI should have been lower, but it didn't, right? That's why that correlation is kind of broken right now. It's not there. We're also going to get some Michigan inflation, some consumer sentiment data, some consumer expectations. This chunk of data at 10 a.m. tends to have like a 2 to 3 candle reaction at most. Unless it's wildly flagrant, it doesn't really have too much of a reaction there. So I want you to kind of like keep that in mind, keep that in the back of your head as we kind of operate and kind of play with this here. But that PPI data tomorrow is going to be it's going to be crucial. I think that markets are still trying to digest what the heck happened with CPI. They ran it up, they ran it down. It's kind of playing a game in the markets, and we're going to see it play out like this today. Because look, at the end of the day, and you're seeing it in market sentiment and articles that are coming out, inflation trickled back up, and that's not a good thing. That's not something that markets like. That's not something market makers like. And it's a signal that, hey, September. And let me actually pull up the Fed rate monitor tool. What are the chances of us getting a rate hike in September? And that's the thing, right? And I think it's kind of foolish right now to talk about the Fed rate hike in September because you still have another month of data coming out before you get to that point. And you can see here right now, 91% of the markets are expecting a skip and 9% are expecting another hike. And personally, full transparency, I'm leaning more towards a hike right now because I'm expecting energy prices to continue to go up because I track this on a weekly basis. Food prices are going to still be annoying because you have the whole Ukraine-Russia situation with the wheat export deal. So I'm not very, very crazy about CPI going into the next print even, but we'll see. Remember, the Fed looks at PCE more than CPI. So that's really much more important there. Let's look at some price action across some other stocks. We know that Disney reported earnings last evening. They had some issues when it came to retaining customers. They lost a lot of customers, but this was also due to their Southeast base, kind of their streaming platform there. I think it's called Disney. It's not Disney Plus. It's something else. Kind of being shut down there. So you lose essentially a ton of subscribers in one shot. And we can see that Disney kind of gapped up last night into the earnings, and then kind of you had a lot of like fear selling happening over these two candles. These are very, very big flushes, and it's kind of evened itself out, even keeled itself, and it's kind of trying to find its footing there. So Disney's been one of those pain in the neck stocks. If you're looking at like every other one of these tech names, entertainment names, Netflix, Amazon. I know Amazon's probably a terrible comp there, but like Netflix, for example, Roku even has had like this big pop, but Disney's kind of had it's still dealing with its heartburn. It never closed this gap down that it got from last earnings, and it almost put in another gap down yesterday until Bob Iger came out on the conference call and kind of gave investors a little boost of confidence. We'll have to see. Like it's an up and down, and the rumor is still circulating really about the Apple acquisition. There was a headline about it that's I think Bob Iger said they're open to the idea, some variation of that they're open to the idea of it. I'll try to find the headline in the second screen, but if I like the idea of Disney coming in and buying them personally, I'll be fully transparent with you guys. I wouldn't mind Apple acquisition of Disney. Now, how long does that take to happen? It'll probably be one of those things that'll be stuck in the courts for years before it finally goes through because of the laws that we have in the U.S., antitrust laws. I think they're antitrust laws in the U.S. It's the same situation that kind of, if you take a look at Activision and the Microsoft merger that's kind of having, that's the biggest thing that's kind of holding, in my opinion, kind of causing some heartburn and heart pain here for it. So apparently, this is the headline. Bob Iger reportedly suggests that Apple acquisition of Disney could happen. And this is coming from the Hollywood Reporter. We'll see. I wouldn't bet on anything yet. Even then, even if it happens, you'll get a spike, and then you'll start seeing stuff coming out like it needs to be approved here, it needs to be approved there. So that's that situation there. I want to see if we have any earnings for the end of the day today. Nothing that really matters. Gevo, I guess it's a name that people like, so we can take a look at Gevo for price action. But I want to go cycle through the usuals. Gevo is one of those. Gevo's that clean biofuel fuel for planes and other stuff. They've been getting their teeth kicked in for essentially since 2021, right? It's been kind of a brutal bloodbath. So I just wanted to show that for anyone there. But let's take a look at the price action on Tesla, for example. Tesla has been essentially, you had the CFO announcement of, hey, he's stepping down, Zachary's stepping down. To me, that's the stupidest thing to initiate a sell-off. I understand it's stupid because we knew who the replacement was. It's been a pillar of the Tesla community and the Elon ecosystem essentially for a very long time. He's stepping in. But again, markets sold this off. They weren't happy about it. They threw a fit. Earnings didn't play too much of a help, so it's been stuck under this 90 MA on the daily chart. You're not going to get fireworks, as I call it, until you get over the 90 MA and then get over the 20 MA. So you're going to really need to get over this puppy right here if you want to see any kind of like movement here on Tesla. And I need to update this chart. So actually, let's do that together. Let's do that while we're here. I'll leave those actual base levels there because I do like them. But I think we're dancing at the lower end of where I would normally put my fibs. And let's get them on the top left so I can kind of get a situation of what's going on. Yeah, we're at a critical point. Look, we're at a critical point over a gap. I've been watching this gap for a very long time. This gap starts to fill. I become a buyer, not financial advice, obviously. But this gap starts to fill. I'm a buyer, but it's been fighting. It's been consolidating for 4 days around this level, this 240 range. You need to get over this. You need this pop. Today's data maybe could have helped, but still the headlines and the sentiment are not positive there. They're still like, hey, inflation's up, yada, yada. So we'll have to see. The markets need like a week, one of those weeks where it's like no news is good news style situation for it to kind of like kick in and kick back up. But we'll see how that plays out. But Tesla, looking at the intraday price action, has not been really pretty, right? So you have the open right here flushed and kind of bounced off of the 0% fib again to the 50 EMA. 50 EMA said not today, buddy, and bounced her back down. So she's been having a really, really rough time. Apple, another one of those that's been having a rough time. I need to update this one as well. So let's do it together. Let's pop. Let's remove some of these individual base levels. And Apple is another one of those that has a gap that I've been watching right here. So let's drop the gap in here as well. This line is too thick for this small gap, so let me just change this up right here. Boom, and then boom. So you have a gap essentially about $1, a hair or two less than $1 gap going right here. I've been watching that one for a while. I'm a buyer in that gap. Again, not financial advice. I'm just transparently talking to you guys as if I'd be running this analysis in real time. So it's really, really cool to see this kind of playing out. It gives you opportunities, but you have this ugly gap down from earnings right here. That is where I think a lot of people are looking for the holy grail gap fill up if things get beautiful again. But when Apple is down, the markets tend to have heartburn. So we're in this 50% fib range. That's kind of a point of, hey, if we break this down, it initiates a reversal to the downside. We are in a reversal to the downside, full transparency, like we can see it. It's been taking a beating. But if she comes down and breaks down, you can kind of start heading lower. Gap fills here. The 173 is your saving grace. That gives out, you have a bit of a volume wall here in the 173. But if that full volume wall gives out, you're down to the 170, 150, and then 170, 50 range there. But I'm hoping. Look, I'm DCA buyer in this gap range here, but I'm hoping we kind of consolidate. We fill the gap here, and then we begin the bounce and ascension back up to Apple. One final one. Let's see. I want to pick one for that had earnings yesterday. Let's do Celsius, right? Celsius is one that everyone's been happy about. Celsius has been having. That's the energy drink you've probably seen your favorite Instagram influencer drink or post about. Everyone's apparently got a contract with them. I need to get myself a Celsius contract somehow. I don't know. I don't drink the stuff. Maybe that's probably why I won't get one. But Celsius has just been on a tear, man. Celsius has been on a tear. Gap up after gap up after gap up on earnings. No relief in sight here. It gapped up last earnings from the high of 107 and it kind of gapped up and kind of opened this candle here at 118, never filled the gap, and then created another gap here, another gap up, massive gap up. Based off the candles that I'm seeing here, these wiki candles, wiki being top wick and bottom wick style situation that I'm seeing here, I think that this gap has more of a chance of filling. I haven't exactly dived too deep into their earnings. I know that looking at the headline numbers, they were good. That's why obviously we had this positive reaction. But this thing is just hitting all-time high after all-time high. The funny thing is I initiated coverage on Celsius back when it was $40 or so, I think, back on my YouTube channel. I gave it an $80 price target, and I was laughed out of the room by Twitter. And, well, here we are at $180. So I guess I was right. Gotta tip my hat to myself on that one. But Celsius, interesting price action here. Let's look at the intraday to see how things are going. The 9 EMA has been a saving grace here, kind of coming within the range of the 9 and bouncing her off. And it's doing well. Again, I'm not really a crazy buyer. I need some sort of black swan event to come in and give me Celsius in the hundreds range for me to be a buyer again for Celsius. But right now, I'm not touching it. Again, if you like it long term, maybe after the gap fill here, if you get it, but really, I think it's really expensive. Let me just check the market cap on this thing. Market capitalization of this thing. It's a $13.5 billion company that sells drinks. Like, it's so expensive. It's so expensive right now. I'm just really quickly taking I just want to check one headline item on the financial side of things with this guy, because like I cannot justify right now buying this thing up here because it's like it's so expensive. Like it's too expensive for my blood, my taste right now. I'll just show you guys what I'm looking at. So for me, these investor decks, they're beautiful, they're colorful, but none of this stuff matters to me. I need to get to the numbers. Here. And you can see that their financial performance is doing well. You've got the numbers across the board in terms of revenue changes are doing well. Gross profit margins are getting better year over year, which is a good sign. Hopefully that's better then. Again, I'm just showing you guys, it's like in the mentality of these investor decks, don't get caught up by these beautiful images and the fancy charts. Come down and take a look at where the numbers are, because this is where the bread and butter of the situation is here. You are seeing here that look at this, like your value per share is going much higher. So it kind of helps and justifies like, okay, these gap ups that are happening. But hey, look, I'm open for some sort of black swan event. Give it to me. Bring her down to $100 a share. I'll load the boat up. I promise. I promise I'll load the boat up. So that's kind of our price action for the day here. Let's go to our event contracts. So listen up. If you have not signed up, go to tradeabate.com. Link is in the description. Sign up for our account here. You create your account. You have the ability to trade the S&P future minis, the NASDAQ 100, the Dow Jones Industrial, that light, sweet crude oil, gold, the Russell 2000, the euro for our friends over the pond, the Henry Hub natural gas, silver, copper for those who don't like gold, and of course for our crypto friends, Bitcoin. So I personally, I'll stick to the ES Mini. You click the strike list. How it works is these are 0 data expiration contracts, the same way you trade options contracts, except on the pricing, it's not multiplied by 100. This is the base. If it says 50 cents, it's 50 cents. If it says 1975, it's 1975. That's the name of a band. And so how it works is you either say, yes, I think we're going to close over this price, or you say, no, I don't think we're going to close over this price. And you kind of place your trade. Hence why we're called place your trades. You place your trade and then you kind of put your money where your mouth is. But it's a lower risk way of trading these futures events contracts. So looking at the chaos that's brewing today on the S&P mini futures, on our E-mini futures, the chaos has been brutal. Our 200 moving average, our 200 simple moving average, just to double check. Yep, it's our 200 simple moving average. Gave a fat technical rejection, brought us right back down, wicked us down to the 20 MA, and it's kind of trying to hold that 50 our 50 EMA here. And really your saving grace twice today, right at the opening candle here at 9:30, we saw it come down, flash to the 4507, bounce back up, and then you can see here again, flash to the 9 EMA, wasn't able to hold it, and it's kind of flashing and kind of trying to hold that 4507. So for me right now, looking at 4500 is where I'm watching here. Is do we close over 4,500 or do we not close over 4,500? Personally, looking at the chaos that's brewing and ensuing today, I'm seeing that we do have more room to the downside. I'm going to need to take a look at one thing really quickly that I kind of keep in the back of my head, seeing how the SPY doing itself on a shorter time frame on this page here. For here, it's at 448, which kind of parallels our 20 MA here. So I would be happy with going with the 4,500 over 4,500 contracts here, but they're 1550. It doesn't give me too much risk for my reward. We want to get some fun in there. We want to get some blood in the game, some skin in the game, right? So looking at the next level is, what is it? It'd be my 4517, so 4520. So looking at 4520, I would be more inclined to say, no, we don't close over 4520. That's kind of where I would put my money where my mouth is right now, is saying, no, we don't close over 4520 just because of the chaos. It needs the price in the CPI print. It needs some day or some juice to kind of get this going. So I would go with no on the 4520s here. Now you're stuck between a rock and a hard place if you wanted to. You can watch it a little bit more closer to the middle of the day. We can see that our 50 EMA right now for our past 3 candles has been support, and that's at 45.12 right now. So if you wanted to, you could go and say, hey, if you wanted to go with, again, I still think that our risk reward on this is much better than this. You can say, yes, we close over 45.10, but the risk reward is better than saying, hey, no, in my opinion, again, not financial advice, is that we don't close over 45.20. That's kind of what I'm watching here. And if you're very bearish, you can go with this contract right here and say, no, we don't close over 45.10, meaning that we're going to come down back here and close within this area, essentially where we were in pre-market in the situation style there. So we had a lot happening today, reviewing it really quickly. CPI data came out better than expected, but still higher than last time. Not great. Here's a quick little breakdown of this. This wasn't your newsletter. Ignore the little typo there. It's not that important. And then we can see here for our event-based contracts, you're going to go to tradeovate.com. You're going to sign up. You're going to go to marketsimplified.com. You're going to sign up for that daily newsletter because it's fantastic. I read it. I'm telling you, read it in the morning. It's really good data and information. A lot of people do a lot of hard work and give it to you for free. Read it, use in your arsenal of trading. Add as many tools as you can to make your life better. So, putting our line in the sand, I'm going to go with that. No, we do not close over 45.20. Excuse me. That's the contracts that I would personally go with today. So, guys, I appreciate you guys watching this show today. We had a lot of fun here tonight. We covered a lot. A lot happened. Tomorrow we have PPI data in the morning, but I will see you next Thursday at 11 a.m. Eastern Standard Time on this network. So make sure you subscribe, hit that like button, leave a comment down below, join the TraderVate network, join our team. We appreciate you guys as always. Thank you for watching. I'm your host, Ryan Rozbiani. You can find me on Twitter at Ryan Rozbiani. See you there. Bye-bye.